Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed. There's lots going on out there, and we're going to try and cover it off a little bit today, just to take a slice of the pie and go through some things that I'm looking at and see if you're thinking the same way as I am. First of all, I want to cover off Snap, Twitter, Google, Facebook. You know, they all have had earnings recently and did pretty well. So I want to cover those off briefly. I want to show you some history on rate cuts. And, you know, it doesn't take, in the world of the internet, it's so quick, you can just Google a couple of things and pull those up. But I think you'll find that quite an interesting little screenshot. We're going to get into some breadth, and Arthur Hill and I calculate breadth or look at breadth differently. And as Arthur says, we're hitting new highs. We're in a strong bull market, and I would agree with that. I would suggest, though, that there's a couple of indicators that I like to look at. And I like to know when there's smoke in the theater, not fire. And so I tend to be, maybe, I don't know if that's more pessimistic or just watching for weakness in the weak stocks first. And when they start to get weak, then I'm expecting, as everybody huddles into the final chapter of the book, before the market tops out, we'll see everybody kind of migrate into the last few stocks, and then as they start to roll over. So we have some technical indications starting to set up that suggests things aren't as strong as they have been, and doesn't mean it's going to roll over. But again, I think let's talk a little bit about the smoke that's starting to show up in the theater and see if anybody cares. And then currencies. That's one of the pieces of smoke that I want to talk about. And lastly, if we get a little bit more time, and it just depends on how fast this all goes, I wouldn't mind just showing a couple of things on the indicators or on the indexes to help walk through that. So we've got a half an hour, so let's fire it up. And here we go. I want to start with Snap, because Snap is doing really, really nice. And again, off its lows, it's up almost 300% now. So that's beautiful. And you can see that it built a base down in here in the February timeframe, gapped up, and this is an earnings gap, I'm guessing. And then the stock has really obviously shown a few investors, and over the last few days, there's a whole bunch of volume that showed up for it the day before it had earnings, and now obviously continuing to break out higher, new 52-week highs. What could be wrong with that? So that's a pretty nice looking chart. Our good friends in the Twitter business, gapping up again here. So this chart, again, the scooter ranking isn't anywhere near as positive. It's been kind of one of the stronger ones, one of the weaker ones. It's not as clear as it has been on Snap. But once again, we're up near the top of the range, and we can keep watching Twitter just to see if they can continue things. And I do like this gap and this move up here to break out to higher highs. That's a nice look. And our good friends Google or Alphabet, when you have a new investor who says they're going to kick in $25 billion, that kind of shoots up the stock. And Alphabet is moving. But again, being an Alphabet, you haven't made any real money unless you're a pretty good swing trader. And then Facebook, since reporting earnings, what did the stock do? It sold off and just gave us kind of a mediocre bar, and now it's kind of weaker. And again, that's a day later. And we have Amazon a day later, or a few days later. And you can see the gap down isn't that great. And then, so last night when they reported earnings, as the earnings came out, Amazon, the stock is selling off. Well, it was down like 1%. And today it's down 2%. So let's not make a big deal out of it. I will say that I'm disappointed that it can't become one of the top performing stocks again. Like Microsoft has been pretty strong, but Amazon has been a little bit weaker in terms of the scooter ranking, just can't stay up at the top. And I got a good friend inside StockCharts, and she owns Starbucks, and every time we talk, she's happier. And there's a reason this chart just keeps going up and to the right. Bottomed out in late June of last year, and this thing has been a bullet from 45 to 95. So really a nice moving stock. So with all of that, I think again the stocks look pretty good. I think I'm surprised when good companies like Amazon break down. But I've got this one chart here, and it's just where are we relative to the prior highs? And here we are sitting. 1964 was the high back in May, got up to 2035, but our all-time high is up the previous September high. And literally the chart marched right up, pulled back, and it was on the retest of the high right towards the end of the month that failed. So here we are retesting, and so far at this point, it's a fail, nothing major. Apple hasn't reported yet, so we're kind of at the end of the wedge there, waiting to see what happens. Facebook was okay, but broke out to new 52-week highs, I think, and then pulled right back. So that's not quite that bullish. Kind of want it to hold that. And we saw this roughly 3 months before, where it gapped up and then pulled down. And then we see Google, obviously the rocket ship, taking off and trying to get back up above the prior highs here. So we'll see how that handles the rest of the day. But $25 billion isn't a small thing, and Apple's got a huge buyback going on too. Netflix, we all know the gap down. It's trying to form some sort of consolidation here after the breakdown. And Microsoft just continues to wind up and to the right. It hasn't really done anything right in here, but continues to be a wonderful chart. And Adobe sitting right in this consolidation range for 3 weeks. And it's literally painting a tape sideways as we head into the Fed meetings. So with all of that, I do want to show one thing, actually. Let me just put Microsoft in here. And again, we just want to look at the SCTR ranking. And you can see this thing is just pretty much pinned to the top in that January period where everything else was running up and Microsoft was only kind of running up. It dipped a little bit, but it's got its mojo back and it continues to rock on. So this stock, easily cleared out of this building base and started to move higher. It's just amazing that they can grow 20% year on year, and the same with Amazon. Amazon keeps reinvesting their numbers, so their bottom line always looks a little ill, but revenues up 20% year on year. So big numbers. Okay, I want to cover off my good friends at the Fed for a little bit. And, this is just snapshot, right? Fed's cuts rate by a half point, September 18th, 2007. And, in a bold, they cut the key short-term interest rate by a 0.5% move on Tuesday in a bold acknowledgement that the central bank is concerned about the mortgage or whatever. And then Fed cuts rate October 31st, but the central bank's inflation concerns signal another cut is unlikely. And now we go to the next page. And here's the Fed's actions in 2007. So GDP was 1.9%. I think we had a 2.1% GDP reading today. Unemployment 6. Obviously, the current unemployment is way lower than that. But inflation was heated, right? Inflation not behaving anywhere near this level. Anyway, we had a 50-point decline September 18th, and I think we all remember that the S&P topped around October 9th on a breakout to a higher high and then failed. So continued to watch that. But then they lowered rates at the next Fed meeting, and that was the one where, we don't see anything else coming. And then in December, they had they lowered it. Then in January, they lowered it by 0.75%, then 0.5%, then 0.75%. I mean, they were winding down very quickly. We have no idea that any of this would happen. I'm just pointing out that literally as we rolled off the top and everybody thought that everything was fine, if the Fed sees things weak enough to drop a 0.5 percentage point, it doesn't mean that everything's rosy and that the Fed, by changing the interest rate, is going to be able to solve the problem. But at least have that on your radar that, we got a Fed meeting next week that they're supposed to cut the rates. Do we make a top next week? Do we make a top this week? Do we make a top a month out, 4 months out? We don't know, but at least be aware that the last time we started a rate cutting cycle, it did mark the top. And even though the Fed was doing something before the market topped, we did end up rolling over. So just, have that as a little background information to kind of counter everybody's bullish enthusiasm, unlimited bullish enthusiasm. We made a new high on October the 9th, 2007, and I guess I could just go get that chart, right? And we'll just pick 5 years. Oops, grab the wrong one. And again, not trying to predict doom and gloom, just saying, the setup isn't bullish just because the Fed is cutting. That's not kind of how it works. So here we have the July high we made right up in this area here. We briefly broke above it in late September, early October, and then rolled down. And so my point is, as you test prior highs and start to break out, that's an important level. And here we are, obviously this 2940, we're at 3,000 and we're trying to get through the prior level. Nothing saying we're rolling over, nothing saying, but it is important as we test this prior high. The Fed's trying to cut to help keep things going. We've got a global slowdown in world trade. Europe says they're going to start doing more QE if this doesn't work, blah, blah, blah. So the market's pretty high considering all of the Fed bankers are talking about doing something and nobody else seems concerned. So we'll put that on the table as something to at least be aware of. Okay, I want to get into the currencies, and there's a reason that I want to talk about them specifically. On my weekend market review, I go through, a huge chart list of stuff, and then I go find other charts to support or break down what I'm looking at. One of the things that's happened, and obviously this red line can move now, but one of the things that's happened is we had this big uptrend in the US dollar and we snapped it. And when we snapped it, we had this big downtrend day. We rallied for 1 week and then we snapped through it, and it looked pretty weak. Well, guess what we did? We basically got down right to the 65-week moving average and bounced off that and rallied back up. And now we're at new 1-month highs again on the dollar. And the real question is, now do we get through 98? I don't know, but this is a pretty bullish candle and it's up again today, trying to push towards that level. But if we see the US dollar break out, look at the momentum trend here on the US dollar. One of the things I like to think about when I'm looking at the PPO is, kind of 4 different things. One is above zero, so above this center line here, above zero and rising, very, very bullish. Above zero and falling, not necessarily negative, but weakening, right? And you can see that the dollar hasn't really done anything. Well, it's done that. It's gone sideways. Now, the real question is here, as we pull back, do we start to turn up here and take off? Now, I've had this red trend line on here for, I don't know, 2 years. And so as we're looking about this trend line, we're coming down, but we're also right at zero. And one of the things we see is when something gets down near zero and starts to turn back up again, that's a pretty positive indication. And you saw this back in 2015, and all of a sudden the dollar took off. And when did it take off? It took off right as the stock market topped in October 2015. So it made a high in May, made a lower high in September, October, and then took off. And so if the dollar is going to start to kick up here, at least be aware of the potential for a big thrust in the dollar. Not saying it's going to happen, but the setup's definitely here with an uptrend support line, zero level on the PPO. And if we can start to turn up, that would not surprise me at all that we get that. And we're starting to see not weakness in gold, but just if I have a little chart that I like to use for my indicators over here, and I'll try and show that to you in a minute. If not, it'll be in the market review on the weekend. But looking at the US dollar, we're back above this 97.50 level. And if we go into all of my various charts here, this 97.50 level has been a red line on my chart for years. And then this special K indicator by Martin Pring has come down, and it had a nice uptrend for over a year, broke through it, but now it looks like it's actually just going to find support on this trend and start to turn back up again. So I'm watching, and we can see that the dollar is above this 97.55 level. So I'm going to come back, staying on the dollar for a little bit here. We're going to quickly cut over for a commercial break about relative strength, which has been going on all week at StockCharts. If you missed the first few shows, I would encourage you to go find them on the StockCharts TV channel, and that would be over here with Arthur Hill, where you'll also find Arthur's video to look at how Arthur looks at breadth compared to how I'm going to look at breadth a little bit later here. So we're going to cut to that tape, and we'll be right back. Okay, and we're back, and we're sitting here looking at the US dollar. I've now moved to a daily chart, so that previous chart, we had it daily with Martin Pring's special K indicator on the bottom. But the point I want to make, most importantly here, because I've zoomed in on the last 2 years, is this big uptrend. We briefly broke it and then have taken back off to the other side. We're now back above the trend line, or let's call it at the trend line. And we're also at this horizontal resistance level of 97.50. And I moved the line down just a little bit, but you can see that we're starting to eke out above that. Now, on the daily chart, momentum has been downtrending for a year, and we're just starting to turn back up here. And this line is starting to push higher now. I could raise it a little bit, but the bottom line is we've got this downtrend. We have an uptrend in momentum that we looks like we were going to break, and now we pop to the upside. I always like the phrase by Martin Pring, and that is that when you get a break in trend and then it quickly reverses and shoots back the other way, the next move is usually above average. So everybody kind of gets faked out here, and then it turns and goes on a ballistic move. And the last time we had a big drop down in the dollar, that was pretty much what happened to it. It went through the top of the range. So I think the dollar is at an important inflection point. I don't know that we're going to see the answer right away. But one of the things that we have, obviously, is the Fed meetings. And two of the Fed meetings in the last year and a half have marked significant tops in the market. I think we're all aware of those. If not, just in a couple of minutes here, I'll show you that chart. So the US dollar is a little bit higher today on the intraday chart using UUP. Let me just go up and grab that Fed meeting chart. And one of the things that happened, so first of all, we had the January Fed meeting of 2018, and you might remember the stock market kind of had a significant top there. We had a Fed meeting in the September timeframe, and the stock market top there. And now we've had this move here. Now in the background, or we're sitting right up here waiting, and this structure looks very similar to me as this structure in here. So we'll keep watching. Again, it could go a lot higher. I'm starting to notice some things like distribution days starting to pile up. So in early July, we had two, albeit I'll call it a holiday volume here. So let's ignore this one. So we had 1, 2, 3. Yesterday was another distribution day. So we've had 4 distribution days in the last couple of weeks. This one will fall off this week, and we'll keep watching. But my point would be that it's, 6 is kind of a bigger deal. And when you start to get to 6, that's an issue. Now, the May market top here that we had, just to remind you, this was also, the Fed meeting topped out here, and we pulled back from there. So as we head into the Fed meeting, we've had earnings, we've had options expiration, we got all of this going on. We know that we're going to get some sort of a rate cut. The last time the market moved, one of the issues was as the Fed cut rates, the market started to change. So I just say that there's smoke in the room, and at least be aware of that. Now let's get into my breadth indicators. And I have some on here that Arthur doesn't use, and the reason he doesn't use them is he doesn't like the composition of the indexes, which is fine. One of the things that I use them for is I do note that that January 2018 big break in the market came with a break in the advanced decline line, and that was here. And then we had an uptrend that broke. Here we had an uptrend coming into the September meeting that broke, and that was a pretty meaningful place right at the end of October, and we fell down hard. And now here we sit, and we're sitting right on this trend line with the advanced decline line. And we've also had lower highs coming off the advanced decline line for a while now. And I see all of the bullish setups. I see the software, and I see the semiconductor starting to turn higher, and I see these big companies producing 20% year-on-year earnings. I don't discount that at all. The big thing I'm saying is let's just keep watching for the breadth. And if this starts to break down, and yesterday was a little bit of a flicker, today it's up a little bit. Let's just keep watching it, because I think it's important to see. And even this little uptrend channel we had for the May pullback of 5 or 7% was here. But what's continuing to be important to me is that we have a declining tops situation over a long period of time, almost a year now, where the Nasdaq, every time we go higher, it puts in a lower high in this indicator. Now you can see all the way up here, we kept making higher highs as the stock market went up. And now we're sitting here at this top level with a lot lower level of advanced decline. And again, the Nasdaq has a bias towards a lower um, advanced decline line. It doesn't necessarily always follow it, but this sort of big divergence is obviously something to pay attention to. And again, I'll call it adding smoke to the room that we're in. So here's the Nasdaq high-low, and one of the things you can calculate a couple of different ways. I've continued to point out that we haven't been able to get the big up thrust that we wanted to. So back here, 2014-15, the market was grinding higher. Worked pretty good. We had the September pullback, and then we got into the May timeframe, and I think the S&P 500 topped out here. And the Nasdaq didn't top out until July, which we're in. And all of a sudden, again, just couldn't quite get a lot of breadth going here. It wasn't too bad, but I like it when we get this big sort of super thrust. And off the January lows, I kind of thought that's what we were going to do. We were going to come up here. We were just going to start rattling off new highs, and the market was really going to get going. We haven't done that. We've stayed in a relatively compressed zone over here. And again, to me, it seems similar, but we're back at zero. And notice how small, this is just a moving average of 8 days here, but notice how small these net new highs have been. And when you go back through here, this was nice and big. Even back in that 2014, 2015 up thrust, we were getting 100 up to the 100 level on this indicator. And yet here we're only at a little over 50. So I'll call it muted, even though software's up 100% and gold stocks are up 100% and semiconductors have been ripping. Don't get me wrong, I see the breadth. I see some of those sectors leading. I keep waiting for the broker dealers index to break out and stuff like that. The banks would be nice to break out. I know JP Morgan tested a new high earlier this week. And we've got, here's the New York Composite. So on the New York Composite, so we just did the NASDAQ, now we're into the New York Stock Exchange. We're taking all the stocks on the New York Stock Exchange. And you can see that we haven't been able to get through these prior highs yet. And whatever, if we might have flickered through them for a couple of minutes or whatever, but in general, every time we close, we don't seem to be able to break through this 250 level. So whatever, we're sitting there, and at least it's worth watching. But look what's going on with the advanced decline line here. It has made higher highs, and that's been one of the reasons to be more bullish. Now, again, the composition of this is skewed because it's got a whole bunch of other components in it that are not operating companies only and that kind of thing. So we're sitting here, but we're sitting right on the line. So we've got this thrust here, and this one doesn't look as weak. We're up around 225, and this surge in here has been very nice. Quite frankly, I like it a lot more. And if I just unwind the tape a little bit, you'll see that this surge here looks a lot better and plenty high for a big market rally that went on for a couple of years here. So this looks really good. Now, again, the NASDAQ doesn't look as good. So let's go to the high lows for the New York Composite. And here we have the breakout that I want to see. We're starting to get this thrust up into the 200 levels, and I still think that's pretty bullish. Now, again, so one is saying yes and one is saying no, but even with that, we still don't have a breakout to new highs or a strong breakout to new highs on the New York Composite. So I continue to watch that. So that just adds a little more smoke to the room. But I have to say, on both the high-low index and on the advanced decline line for the New York Composite, they both look very bullish. And until those trend lines break, I think you want to stay that way. And again, as Arthur mentioned on his video, S&P 500 hits new highs, you got to be bullish. So what we're watching for is some of these other things that might show up here. Now, here's the advanced decline line for the S&P 1500, a little wider, but as you can see, we're sitting right on that trend line. When it broke last October, that was a good place to be aware of. And so all of these this week are sitting on the trend line. Now, I will show that the Canadian market usually is typically a little weaker. than the US market. And again, one of those things where weaker markets fail first and the strong stuff will survive and show up at the end. And so we're sitting right on this trend line coming off the December lows right up here and trying to hold that up. We haven't been able to break out to new highs either. We keep trying. We've got an uptrend here for 2 months and a flat top on this. So it's either going to pop to the upside or we start to get a fail here. So an important place to watch. And again, the last push up here on the moving average was, I'll call it muted compared to the previous peak. So it seems to be getting weaker. In general, the trend is getting weaker for less advanced decline. On the high lows on Canada, we still haven't been able to break out of this 2-year sideways range. Again, commodity related country. We know commodities haven't been top of the market, but even with the surge in the gold stocks, we haven't been able to do much. So all of this adds up to me to just at least be aware of the change in trend. And I've mentioned the bullish percent indexes on the market review. And if you haven't heard that, I'll do it again on the weekend. Please try and catch that. But I think that all of these things are pretty important. Okay. So again, we're in a bull market because we're making all-time highs. It doesn't mean that it's just ignore the smoke. I think there's a lot of things that are sitting there and give us a reason to pause. I'm just going to switch over actually to this chart list. And I want to just run down and pick up a few of these. So here's the distribution days on the Nasdaq. The one I showed previously was for the S&P 500. And again, we had one here. We'll ignore this one because of the low volume the prior day, but we had one here, two here, three here. So yesterday was another distribution day. Three is not that many. What we'd be worried about is if all of a sudden we started to have two or three more show up very quickly, then that would probably be more indicative. So distribution days are when you make you have a down day on higher volume than the day forward. And typically what you see is a lot of green bars together, and then all of a sudden the red bars start to show up. And that's kind of the idea behind the distribution day thinking. So the stage is set for that. The one thing I will say is that the Nasdaq the Russell continues to underperform. And when I look at this, one of the things that I note is when the Russell PPO goes below zero, you probably want to at least have your sell button ready. And we're sitting, with this last week, it looked like it was going to roll over this week. It's turned back up. So keep watching. But so far, we've got a downtrend in momentum that hasn't been broken. And if that wave starts to fail here, I'd be much more concerned about breaking down. Not only do we roll over here, but we roll over right at zero. And that's just a meaningful place as we head into a Fed meeting. So hopefully I've made my case why I'm less bullish than Arthur. I'm still bullish because it's an S&P new high. I'm not comfortable that a lot of these things that are starting to sit here in the weeds are sitting right on all of these major important inflection points in the way I calculate my work. So I encourage you to check that out. Now, I did mention gold briefly. And what I want to show you here is just on this GLD chart. And I have a simple little template that I use for 60-minute chart. And what we've got here is, we've been uptrending for 2 full months, and we're trying to hold. This is roughly the 20-day moving average. Be careful with it. It looks to me like gold is getting a little weaker, and down here, this Big MACD has started to die off. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel. Thanks again. Have a good weekend. Bye-bye.